Well, hello, you guys. It's your girl, Gabrielle. Welcome to a brand new episode of Hot Topics. I am once again doing this from my car. Uh, so let's see how this goes. All right. So, for those of you who are unfamiliar with the broadcast, let me tell you what this broadcast is about. Um, this broadcast is called Hot Topics, and we like to talk about steamy things, right? We like to talk about education, employment, business, entrepreneurship. We like to examine a lot of different. Gotta keep moving my phone. We like to talk about a lot of different topics, but we like to look at it from an educational point of view. So, I'm sitting in my car right now. It is pouring raining, so hopefully, uh, hopefully the connection is still pretty good. All right, so I have a guest with me who is going to help me out with this discussion. Um, but before I do that, I have to tell you what the name of the show is. So let me tell you what the name of the show is. The name of the show is How Do I Start a Business Part 2, right? So we're going to continue this discussion about how to start a business, but today is going to be a different direction, and that we're going to talk more about the tax implications that come with starting a business. So part 1 was about the paperwork and the legal stuff. So today, part 2 is about the taxes that are involved. Whoa. And my guest is going to help me with this discussion. Her name is Wendy Barlin, and she is a CPA, and I'm going to have her tell you about herself. So this is again one of those unusual circumstances. So I'm just going to bring her on camera right now. Hi, Wendy, how you doing?
I'm good, Gabrielle. How are you?
Good, good, good. All right. So if you wouldn't mind telling people about yourself.
No problem. So, I'm a CPA. I've been a tax accountant and advising small business owners just like you for the last 25 years. And more recently, I actually sold my business so that I could focus completely on educating small business owners because my passion is that there is nowhere to learn about this stuff. There's Google, and that's not the most reliable source. So, my passion is to educate small business owners about how they can save more money, how to save money on taxes, what happens if you get an IRS notice, all the things that most people have nowhere else to turn to. And that's why I'm here today to work with Gabrielle to share information with you so you can make smart choices.
Fabulous. Thank you so much for that. All right. So let's jump right into it. All right. So starting a business, tell us about the taxes, the tax implication, the rules, all that is involved with starting a business.
Well, when you decide to start a business, I do not recommend you run out there and get an entity, an LLC, a corporation. I see so many people that spend hours on the internet researching different kinds of entities and not starting their business because they're waiting to pick an entity. Please just get started. You do not need an entity to start your business. In fact, I recommend that you spend about a year just growing your business before you pick an entity, because we would need to know, is this business going to be profitable? Are you going to continue? Is it worth it? And then we pick an entity. So for now, if you are just getting started, just go for it. What I will say is make sure you get insurance, really good professional liability or some sort of insurance to cover you in case somebody sues you when you have trouble. You don't need an entity to do that. Insurance can do that, and it's so much cheaper and easier. So that's my best advice. If you're ready to start a business, just get out there and get started, get proof of concept. Then when you're rocking and rolling, then we can talk about what kind of entity is best for you.
All right. So that's interesting. That you're saying, not to start not to get an entity right away. Can you explain that further?
So entities are expensive. It's expensive no matter what kind of entity you get. There are legal and tax requirements associated with every kind of entity. You may pick one that doesn't work for you in 2 years or 3 years. And now you've spent all this money getting an entity that was the wrong one for you, because we don't know how your business is going to go. We don't know how it's going to affect you. And the real kicker is the tax deductions that are available to you as a business owner without an entity are the exact same tax deductions that you would get inside an entity. There is no difference. The tax law says anything is deductible for your business that is ordinary and necessary. It doesn't say in a corporation. It says as a business owner, anything is deductible that is ordinary and necessary. So whether you have a corporation or not, you get the same tax deductions. It makes no difference. So why would you go through the expense and the headache of creating an entity when you would get the same deductions anyway? And we don't really know if this business is a go yet or what the issues involved are going to be.
Well, with that, I know that with each entity, I mean, the deductions are the same, but it's how it trickles down to your personal return, right? So isn't it different for each one? Like I know with an S corp, because I have an S corp, the trying to say like the net loss, trying to remember what the net income that reflects back on my personal
Yep.
return, and then it's different for. And the LLC would be different, right? In terms of
correct, but the tax deductions are the same.
Okay.
The tax deductions that you can take are the same as I can take without an entity. And I have many clients who run multi-million-dollar businesses that never created an entity because they don't want the headache, they didn't want the expense, and the dollar for dollar savings isn't worth it. And I have other clients who are like, oh, if I can save $1, I don't care about the paperwork and the headache, bring it on. So it really is a personal choice. And at the end of the day, the tax deductions are the same, whether you're an entity or not. So my point is, don't get an entity. Just don't get an entity if you're just starting out. If you're just starting out, first figure out the business of the business. And then you can always set up an entity later. I find too many people delay starting their business because they can't decide on the entity type, or they spend so much time trying to figure out the paperwork and the requirements of an entity that they set aside the actual growth of their business. And my focus is grow your business, go make some money, and then we can talk about what kind of entity you should be.
All right, so let's get into the meat of it, right? So, you developed your proof of concept. It's entity time. Okay, so discuss the differences among the entities.
So you don't want to go to Google, you don't want to guess, and you don't want to do what your friends are doing because for every business, there's a different entity that works best. And for every person, there's a difference in different kinds of entities and how they would work for you. As Gabrielle was saying, some entities actually end up with the profit of your business being taxed on your personal return. So if you have a spouse that you're filing with, now all of a sudden your business entity choice affects the family tax return. So you can see how you can't just go out to Google and pick one. Oh, I think I want to be an LLC. Yeah, that looks good to me, because that's going to affect your family tax return. So this decision of what entity type is right for me is actually a critical one. And I recommend that you spend time with your tax advisor who can actually show you, if you choose an LLC, this is how your life would look. If you choose an S corporation, this is how your life would look. If you chose a C corporation, this is how your life would look. Some of it has to do with dollars. Some of it has to do with paperwork. Some of it has to do with expenses associated. Some corporations, depending on what state you're in, are significantly more expensive to run than others. And again, that's why this isn't oh, well, everyone else got one of these, I'm going to get one of these. It's a very personal choice, entity to entity. I will say that LLCs are really the cheapest entity to set up and the easiest entity to run. So for lawyers, they're always the first choice because they give you legal protection. Lawyers love them. They're super easy to set up, super cheap to run, but they're tax issues. First of all, there are some professions that are not allowed to run through an LLC. So depending on what you do as your profession, as your business, you might not even be allowed to have an LLC. So you need to, first of all, be sure that your business can run through one. Second, you need to make sure that you are in a state that doesn't charge LLC fees. There are some states that charge fees over and beyond taxes specific to LLCs. So I have people who come to me with an LLC because they're like, oh, my lawyer said this is the best, it's the easiest. Okay, now you owe $10,000 to the state of California for an LLC fee, but I didn't make any money. Yeah, the state of California doesn't care. You have an LLC based on your revenue, that's what you owe. So there are a lot of states that have fees associated with LLCs. So please be careful. And that's, again, why I'm saying this isn't a one size fits all. It's very particular to what kind of business do you do? What's your family situation? What state are you in? And don't assume that just because it works for everybody else, it will work for you.
That's interesting. You brought up a lot of interesting points. It's not a one size fits all. So depending on the entity that you set up, it depends on your lifestyle, like you said. It also depends on the rules of your state, like you said. So I know it's different for everybody, but I just want to see if we can pinpoint some scenarios. So let's break it down. So like I said, like my company is an S corp. I kind of went the lawyer route. My lawyer was like, get an S corp, and I'm like, okay. so um so let's break it down. So I understand it's different for everybody, but let's get some general scenarios if that's okay with you.
Sure.
So let's start with an S corp, right? So what is the best situation for someone with an S corp?
Well, an S corp would be best for someone who doesn't have a high earning spouse. So
Okay.
imagine this scenario. My spouse has a job where he makes $1 million. He doesn't, but that would be nice. So let's assume.
Okay.
Okay, so he's going to be in the highest possible tax bracket, right? He's going to be paying tax at 37%, just federal, than whatever state we're in. So he could be paying 45% tax on his income. Now, let's assume that I have my business and I make some money. I make maybe $50,000 to $60,000 taxable net after expenses, right? My $60,000 is now going to be taxed at the family rate of 45% because that S corp income goes to the family return to be taxed. So that kind of hurts my gut. I worked so hard and so proud of my $60,000. And now 45% of it is going away to taxes because my spouse puts us in that bracket as a family. That's a travesty. A better solution for that scenario would be for me to be a C corporation, where a C corporation's taxes are capped at 21%. So now I pay 21% on the profit of 60,000 and not 45. So that's an example where an S corporation from a legal point of view would be a no-brainer, but from a tax point of view, maybe not the best strategy, right? That's kind of one example. Where an S corporation works best is where you're kind of both in the same bracket, so it doesn't matter. My 60,000 still gets taxed at 21 to 25% as though I were a C corp. Then doesn't matter. Then sure, be an S corp. So this is where for every single person, I actually do the math and I say, all right, well, here's what it would cost you in taxes. Here's what it would cost you in paperwork. Here's what it would cost you in filing. What do you prefer? Because some people will say to me, you know what, just keep it simple. Like I say, there's some people who never incorporate and it costs them an extra $10,000, but they're like, you know what, I don't need the headache. I don't need all the stuff landing on my personal return or my spouse being mad at me, and I'll just pay my taxes. So it really is a personal choice, but you can see how in that scenario, it's actually more expensive to have an S Corp.
Interesting, interesting. All right, because with S corps, it's the incomes add up to each other, right? So it's the
Yeah.
income. So I'm just going to make a quick interjection. I see some viewers watching right now. So if you have any questions, please put it in the chat. All right, so back to my point. Because with S corps, the incomes add up to each other. They accumulate. So it's your personal income plus the income of the business plus your spouse's income. So all of those add up together, right? They
They
accumulate.
all land on your personal tax return, correct? They all come in
Yeah.
splat and land together on your personal return. And so you kind of have to take that into account. A lot of what I do, and one of my big wishes for everyone on the call today, is that you never ever see your accountant once a year. That is foolhardy, and you are absolutely leaving money on the table. You need to be working with your accountant all year long, especially every quarter when estimated payments are due. I highly recommend you check in with your accountant every quarter, because they can give you a heads up on this. They can say, oh, wow, Gabrielle, your income is really close to the next bracket. At that bracket, you're going to lose some personal tax deductions. Oh, we need to kind of put our heads together, make sure that doesn't happen. So this is where, because your income kind of all comes in together, every quarter I would meet with my clients, ask for their spouse's payroll, their business numbers, put it together and see, where are we? Are we close to any brackets? Do we need to maybe, go out and buy a new computer so we can come in under a bracket? We don't want to kind of wait until March, sit on the edge of the chair for that call from your accountant saying what you owe. You need to be ahead of that so that there are no surprises. I truly believe by Christmas, we should all know whether we're getting a refund in March or whether we're going to owe money in March. And that is absolutely possible. And if you're not doing that, you need to do that.
Awesome, awesome. I should be taking notes because I think I'm one of those worst case scenarios. Um, all right. All right. So, I had a thought. I guess I forgot my thought.
Oh,
Okay, yeah.
no.
So wait, with C corps though, isn't it double taxes?
Only if you don't do it right.
Oh,
Only if you don't do it right. So if you work closely with an accountant or a tax advisor, then you can absolutely avoid double taxation, but you have to do it right. And again, that comes back to when I interview clients to choose an entity, I say, how involved are you going to be? Are you going to be responsive? Because we need to work together to make sure we get you all the deductions, you file your paperwork on time, you do everything to avoid double taxation. For people who are like, listen, I'm going to be honest with you, Wendy, I'm kind of sloppy. I don't like the paperwork. I don't like the taxes. I'm going to avoid you like the dentist. Okay, then I will never recommend a C corporation, even if I could save you 20 grand. I'm not going to recommend that for you because the penalties are going to be too big. So for my clients who say to me, you know what, I just can't handle that. I just want to go do my business. I just want to do my business. I want to sell. Okay, then we need to look at an entity that is more flexible. Not always about saving money. It's just not always about saving money. Sometimes it's about saving time. So what you were saying about C corporations and S corporations, they by law are required to pay their owner's payroll. That means you, as the owner of an S or a C corporation, are required by law to pay yourself payroll. That means filing all sorts of forms with the government every quarter for payroll. Do you want to do that? And if you don't want to do it and you hire a service to do it, which is what I do, it's expensive. So now I've added a cost, an additional charge to my business, because I'm paying a payroll service to run payroll to keep me within the confines of the law, but it's costing me money. And if you don't want to do that, and you don't want to have that headache of more paperwork and another vendor to deal with, then maybe an S and a C Corp is not for you. Then maybe you need to go the LLC route. So again, another example of why it's just not an easy, oh, an S Corp will save you money. Because I hear that all the time. People call me and they're like, oh, I need an S Corp because I heard it's going to save me money. And I'm like, all right, well, is it? Is it really? And how much? And how much money is it going to save you versus time? Like, I'm a mom, I have 2 kids and a dog. My time is some days more valuable than money to me. And so if I have to do something that now requires more time, how much money do I need to save to make that time more valuable? Because I got lunches to pack in the morning. So for some of my clients, they're like, oh, I don't want to deal with payroll. No. Too much time. Pick me something easier.
Ah, interesting. All right, so let's jump into LLCs now. So what is the best scenario for someone with an LLC?
There are only two scenarios where I ever recommend an LLC. One is if you are dabbling in real estate. So buying and selling real estate is best in LLC. There are some tax laws that make it preferential to buy and sell real estate through LLCs. The other is if you have unusual ownership. And I see this a lot in the movie business. I see this a lot in real estate where, let's say, Gabriella, you and I decide to go into business together. But
Right.
I'm not going to work in the business. I'm just going to give you half the money. So we're 50-50 owners, but you work the business. So you actually get all the money for working in the business. We can do that. We can be 50-50 owners, but you take the profits, you take the earnings. An LLC allows that, but a corporation does not. In a corporation, if we're 50-50 owners, we're 50-50 everything. And so especially in today's situation where I see a lot of this, oh, my mom's going to give me money. She wants 10% of the business, but no, she's not going to work there. No, she just wants to own 10%. I'm like, well, then a corporation is going to be a problem. Then an LLC is better. So that's the one situation. Outside of that, it is never, ever a good idea. For taxes, there is absolutely zero value in an LLC for taxes if you are a operating business. None.
Wait, hold on. I'm sorry. So if someone wants to own 10% of my business, but they don't actually want to do any work, they just want to financially support, I'll give you the money, just give me 10% or whatever. If with an LLC, I guess I'm trying to wrap my head around it.
So when you're an S corporation, if I own 10% of your business right now, I get 10% of your profit, period. I just do. If you're an LLC and I own 10% of your business, you can choose to give me none of the profit. I can just be an owner. So I don't get anything till you maybe sell.
Whoa, okay. I learned something new. So then so what's the best route for a shareholder or an investor?
It depends.
It
depends, right? It depends on the strategy. Do they want money out? Do they just want to be an investor till you sell? Or do they just want it to be a loan? Like, I'll give you 10,000, you pay me back at 8% or no percent, whatever deal you can make. But yeah, so again, it's about strategy. And this is why asking your tax advisor in conjunction with your lawyer before you do anything like this is really, really, really critical, especially if you own a corporation.
So now, what if you want to hire somebody? What's the best route to go if you want to hire an employee or an independent contractor?
So that doesn't matter. Any kind of entity, it's the same. Whether, in fact, you don't even have to be an entity to hire people. Anyone can hire people. You just pay payroll, withhold taxes, pay it over to the government. Anyone can hire people. The difference between independent contractors and payroll employees is actually a very, very tricky one. And that does require a legal opinion state to state. Some of the states like California and New York, they are actually kind of really not allowing independent contractors anymore because they want their money, like they want their unemployment money. So depending where your person is based, where you operate out of, I really recommend checking in with a labor lawyer before making that decision of who's an employee and who's a contractor, because it is very slippery slope. But it doesn't matter what kind of entity you are. All entities have the same payroll situation.
Oh, okay. So if someone is an independent contractor, or let me flip that. So if someone is a sole proprietorship, they can hire somebody.
Oh, yes, absolutely. Anyway. Yep. And that's what I'm saying. Sole proprietors have the exact same deductions that you and I have as entities. Meals, travel, parking, whatever. Everybody has the same deductions. It doesn't matter. And that's why people have to there's so many levels. The first level is go get your deductions. do good record keeping. Let me help you find more deductions to save you more tax money. That's like step one, right? And then the next level up is, okay, what am I doing with this business? What entity serves me best for now, for 3 years from now, for 5 years from now? One of the first questions I ask people is this going to be a lifestyle business, or are you planning to sell? Because that will dictate how we set this up and where we go with this. Just like you said, are we taking investors? Are we taking loans? All those things affect the entity, but we start with tax deductions. Are you keeping your receipts? Are you keeping good records? Because I need deductions. No matter what entity you are, I need you to have receipts. No matter what entity you are, I can only help you with deductions if you keep track of your expenses. And so more often than not, my conversations come all the way down to that very, very basics of where are my deductions? Because no matter what entity you are, I want to get you as many deductions as I can. And that we do together.
All right. All right. So we did LLCs, we did S Corp, a C Corp. All right. What about a sole proprietorship? What is the best scenario for a sole proprietorship?
So sole proprietors are for people who are just getting started. If you are just getting started, take a year. Just make sure this business is profitable. Make sure you like being a sole proprietor. Make sure you like being a business owner. I have some people who quit their jobs and then they're like, oh, this is terrible. I kind of liked having my job. I miss my job. And they go back. So I don't want you to set up an entity and then after 3 months go, I don't want to do that. I'm going back to work. So sole proprietor is a great place to start for the first year. Just go for it. And then at the end of that first year, if you found yourself profitable, although truthfully, it's usually 3 years before most people see any kind of significant profit, then you go, okay, now I'm ready to incorporate. I'm in this for the long haul. What kind of entity works for me? Then you have that discussion. And like I said, I have a lot of clients who never incorporate. I have clients who make $10 million as a sole proprietor. And they pay a little more taxes, but they just don't want the headache of the additional paperwork and the expenses of a corporation. They just want to keep it simple. Sole proprietors are super simple and you get the same tax deductions as everybody else.
So now what would make someone go from a sole proprietor to an LLC, for example? Like what's the evolution?
If someone went to an LLC, I'd go, oh, what a waste of money. So don't do that. But if you went to see a tax advisor at the point that your business is profitable and you said, I'm thinking of becoming an entity, what entity would work best for me? Then we would do the math and we would go, okay, if you were an S corporation, the loopholes in the law would allow you to save this amount of money on your payroll taxes. Really, it's a tax loophole. It's super complicated, but there's a loophole and we could save you this. However, this is the downside. You would have to set up payroll. You have to file a separate tax return. This is what it's going to cost you. This is what it's going to save you. Which do you choose? Or here's a C corporation. Again, this is how it works. This is your responsibility. This is how much I can save you. What do you choose? And some people go, yes, I'm in. And other people go, too much headache, I'll come back next year. And sometimes people come back 3 years or 5 years later and they say, okay, now I'm ready. Now I'm ready. So it's really about dollars and time and how much you want to commit. But I would say once your business is profitable, that's when it's time to go and talk to someone about creating an entity.
So you want to be a sole proprietor until you reach profitability, then consider being an entity.
Because if you have losses, there's nothing a corporation is going to do for you except make bigger losses because you're spending all this money on an entity you didn't need to spend.
Interesting. So can you just define that? What is profit? When you say be profitable,
right.
What does that mean?
It means that you make more money than you spend. So if I bring in $100,000 doing my services and I spend $120,000, my loss is $20,000 because I spent $20,000 more than I made. So I have a loss for the year. And there's no entity in the world that's going to do anything for me at that point, right? Other than cost me more cash. And I'm all
Yeah.
about green money. I am all about green money. So yes, I love a good tax deduction, but more important than a tax deduction is green money. So I don't want to spend any green money if I don't have to. And so that's why I'm like, profit is when you make more money than you spend. So if I'm bringing $100,000, but I only spend 20, then I have profit of $80,000. Now I'm going to pay tax on profit of $80,000. That's when I might say to an accountant, it's going to be a lot of tax. How can we do better?
All right. We'll talk about taxes in a minute, but did I get all of them? So we have S Corp, C Corp, LLC.
Yeah.
What about nonprofits?
Nonprofits are another complete animal. They are highly scrutinized by the IRS. So I only recommend a nonprofit if you truly are going to do the work of a nonprofit. So I have a lot of people who call me and they go, well, I have a Pilates studio, but I run the money through a nonprofit because we give like $3 to charity. And you can do that. I mean, you can do anything, right? Until you get caught. And I'm very careful with nonprofits myself because the IRS is scrutinizing them because there's been so much fraud in this area. So if you truly want to do a nonprofit, by all means, go ahead. But I think just through any regular entity, you can still be charitable. You can give as much of your money as you want to charity. You don't have to do it through a nonprofit. Yeah, nonprofits are fantastic, but they're expensive. They're a lot of work and they're highly scrutinized. So just know that when you take that on, it needs to be clean as a whistle.
All right. And what about partnerships?
Oh, very dangerous. I've been in one. It's worse than a marriage. If you've ever been divorced, you can only imagine how awful a partnership will be. So there are some partnerships that work. There are some that work, but I generally don't recommend it. Especially in the modern world that we work in today, a lot of my consultants and clients are doing kind of joint ventures in a way where you have your own business, I have my own business, but we split revenue or we give commission to each other or we work out some sort of deal where we're not truly partners. Because otherwise what happens is if you and I are partners and I run a very aggressive expense through the business and we get audited, guess what? We're both getting audited. And so things get nasty really fast, especially where two people are in different places in their lives. Like my partners, when I was in partnership, my partners were older than I was. They had different cash flow needs than I did. And it was really hard to kind of balance that with equity of any sort.
So you don't recommend partnerships. So you would recommend what? Like
strategic relationships where you share commission, you do revenue share, you do strategic relationships. You each have your own business, but you figure out a way to work together.
Interesting. Okay. So now so how does that work? So when it comes to divorce, is it different for each entity? So is it different for an S Corp? Is it different for an LLC? How does that work with
You mean
divorce?
A business divorce where you split up from your partner, business divorce, or a personal divorce?
I guess a business divorce because of like your husband, if you're in business with your spouse, right?
Yes.
And you get divorced.
Yes.
How does that work with each entity?
Well, you either have to buy the other person out or you share it. I mean, it really just depends. I'm not a divorce expert. So I think it really just depends on what you agree to. There's no hard and fast rule about what has to happen because, they're wholly owned business. It's not like you're Nike and you've owned by shareholders, right? It's your business. It's your spouse. So you just get to negotiate it out. It's not like you have a board of directors telling you what you can and cannot do.
Okay. All right.
Yeah.
So my other thought, and we're getting to the taxes, is so for corporations like McDonald's, like global corporations, hotels. So those, I'm assuming those tend to be C corporations.
That's just not my area. I don't work with those multinational, international corporations. I don't know, Gabrielle.
Yeah. Oh, that's okay. All right. All right. So in terms of like doing business in other countries, different currencies.
I do a little bit of that, but not a whole lot. Most of my clients are national to the US. I mean, they might sell a little online internationally, but the money all comes here. So, US tax law is that you pay tax in the United States on worldwide income. So, if you sell online courses and somebody buys one in Japan, the money comes here to the US and you pay tax here in the US on that money, even though the actual recipient of the course happens to be in Japan or anywhere.
Yeah.
In America, you pay tax on worldwide income. So that's most of the work that I do. When you're talking about actually setting up bank accounts and entities outside of the United States, that is extremely complicated. And I highly recommend you go to big CPA firms for that, where they have a big tax research department that can figure out what the agreement is with those countries, because the United States has a tax agreement with every single country in the world, and they're all different.
Ah, all right. All right. All right. So taxes. So what is the percentage? What's the percentage of taxes? So the more money you earn, it's natural to assume the more taxes you have to pay, right?
Yes, and that's a good thing, right? So when people call me and they say, I don't want to pay any taxes, I'm like, I'm sorry for you, right? That means you didn't make any money. How sad. Yes, the more money you make, the more taxes you pay. But I try and think of it this way. If I make $1 and I have to give 50 cents to the government, I still get to keep 50 cents. That's better than zero. So I always tell people, make as much money as you can. We'll do the best we can on tax deductions. And yes, you're going to pay taxes, but you're going to keep more of your money. It's great. No complaints.
All right. So how much exactly do we pay in taxes? Like,
well, the brackets are huge. So it really just depends. There's brackets for single people, brackets for married people. It's all over the place, Gabrielle. But the highest tax rate right now is, I think it's 37% individual. And then every state is different. Some states are 0, some are 10%. So it's really, really, you almost can't put an average on that. Every single person's tax bracket is different.
so it does. So is that the same for any entity you have?
No, because remember, only C corporations actually pay entity tax. The
Okay.
other entities, the income, like we talked about, all ends up on your personal return, right? And then all your personal income gets added together, and then we have to look and see which bracket you're in to determine your taxes. So it's kind of a moving target, but I wouldn't worry about that, because that is something that's completely out of your control, right? The government sets the rates and they are what they are. I think for everybody on the call today, your responsibility is to make as much money as you can in our capitalist society. And then your tax advisors will help you keep as much of that money as you can. But I wouldn't wake up every day worrying about the tax rates. I would wake up every day and go, I'm going to make as much money as I can.
All right. But I mean, at the same time, it's like you want to be aware of, like, I think of how much is coming out. So isn't with LLC that kind of works the same way as an independent contractor?
Yes, correct.
So is that 15% or 15.3%?
So what you're talking about, though, that's not income tax. That 15.3%, that's a payroll tax. That's Social Security and Medicare. That's different than income taxes. What we're talking about is income taxes. So that's a little different. There's all kinds of other taxes, right? There's city taxes, and some counties have business county taxes. So running a business has a lot of responsibilities. You have to sign up with your city, you have to sign up with your county, and there's all these layers of taxes. And that's why it's so important to work with an advisor, because the last thing you want to do is get a letter from your city that says, oh, we see you've been operating a business in the city for the last year, and now you owe $5,000 in city taxes. So it's really important to understand the different kinds of taxes. Tax is such a big word, but it's actually there's so many different kinds of taxes. So it's really important. People send me notices that they get in the mail, and they're like, oh, I got this tax notice. I'm like, yeah, but that needs to go to your lawyer. That's not an income tax issue, which is what I deal with. That's a legal notice that looks like a tax notice, but it's actually a legal document. So they're all different kinds of taxes. It's really important to understand which ones you are responsible for in your kind of business, in your state, in your city, because for everybody it's different.
Yeah, like with me, like I have an S corp, so, and I do payroll, so there's like it's I don't know how to describe it. It's sort of like there's the employer taxes
Correct.
above the employee taxes.
Yes.
So whatever you do in payroll, you always have to pay more because then you have to factor in employer
Right.
taxes.
Right.
Um, it's like and I'm in New York, so it's like,
Oh, that's an
yeah.
expensive one. Yes. Yes. So that's exactly right. And it's really
Yeah.
important to understand that. And here's what I'll tell you. Keep asking, because it is our responsibility as tax advisors to explain this stuff to you. And so if your tax advisor is not explaining this to you in words that you understand, please go back and keep asking. And if they don't, get another tax advisor. My mom went to the doctor and she calls me and she goes, oh, the doctor said I should take these pills. I'm like, Mom, why? She's like, oh, I don't know. He's the doctor, so I'm just going to take them. I'm like, oh my goodness, no. Go back and ask the doctor, why are you prescribing these pills? I don't understand. And it's the same with your taxes. Keep asking. I don't understand. Why am I paying this 15.3%? How can I do better? What can I do differently? And if you're not getting a good answer, ask again. Ask again. I'm not shy. I mean, if they want to think I'm stupid, they can think I'm stupid. I'm going to keep asking because it's our responsibility. Like we can't hand this over to someone else. You want to understand this stuff. And if your person is not explaining it to you, get another person, because it is our responsibility to explain to our clients what they're paying and how they can do better.
Yeah, absolutely. Absolutely. All right. So if someone comes up to you and says, I want to get into business, but I want to pay as less taxes as possible. What's your advice?
Keep good records. Keep good records. Keep track of every single dollar you spend. Period. End of story. That's how you save money on taxes, because then your tax advisor can go through your records and go, ooh, deductible, ooh, deductible. If you don't have really good records of every dollar you spent with receipts, then I cannot help you. So I have people who come at a guy the other day. He comes and goes, I made $1 million. I need you to help me save money on taxes. I'm like, great. Where's your list of expenses that matches your bank statements and your credit cards? He's like, oh yeah, I don't really have that. I'm like, well, if you don't have that, there's nothing I can do. Because it's like, I can't go, oh, how about this? We have to have records. So if you do nothing else and you learn nothing else from today, please keep record of every single dollar you spend. And I mean every dollar, every parking receipt, every piece of sticker gum you buy, I want to know about, because then I can help you find more tax deductions.
So let's jump into that, and keeping an eye at the time. So quickly, what is deductible and what is not deductible?
Anything is deductible for your business that is ordinary and necessary. That's what the law says. Anything is deductible for your business that is ordinary and necessary. You can see how broad that is. So you have to decide, how much risk do I want to take? Do I want to be super aggressive and deduct everything in my life? Or do I want to be more conservative, deduct a little less, and sleep well at night going, no one can ever look sideways at the deductions I've taken? And that's the discussion I have with people every single day. Look in the mirror, and where is your line of risk? And that's what we're talking about. But every single dollar you spend, you say to yourself, if I was sitting across the table from an IRS agent, how would I make a case for this stick of gum being tax deductible? Why is it ordinary and necessary for my business? And if you can come up with a decent answer, you have a deduction. Now, there are a couple of things that are actually forbidden. One thing that is forbidden is clothing. So just saying I need to wear nice clothes to meet with clients, not deductible. The only clothing that's deductible are uniforms. So something with your logo on or your company name on, that would be deductible. It's a uniform. But just saying I need nice clothes doesn't fly. So no clothing, no country club dues, and no gym memberships. Those are the three things that are specifically not deductible. And so I don't recommend that you even go there. Because people call me and they go, well, maybe my gym. No, just don't go there. Ordinary and necessary is so broad. That's where you're going to find more tax deductions.
Wait, so not gym memberships?
No gym
What
membership.
if it's a gift to somebody?
Well, again, why would you even play in that area when ordinary and necessary is so broad? Go there. So I'm always in the case of, we have this huge range of what can be deductible. Why would we even waste any time, money, or energy trying to put a square peg in a round hole of the things that specifically the IRS has said no to? Because here's why. If you get audited and they find things in ordinary and necessary that they don't like, okay, we can usually negotiate them out, or we can go, oh, whoops, sorry, you made a mistake. But if they find you playing in the three areas that are specifically forbidden, guess what? No more negotiating. So why would you?
So repeat that again. So gym memberships, what's forbidden?
Clothing, and
Okay.
country club membership.
Ha. Okay.
Yeah.
Interesting. All this is pretty interesting. I'm learning
I know,
a lot
isn't it
today.
fun? I love it. It's such an exciting topic. And in truth, Gabrielle, I think this is what's so important is this stuff is not hard, right? We're not talking about anything today that people on the call don't understand. You can understand this. You can understand, okay, if I buy something today and I say to myself, is this an ordinary and necessary expense for my business? I think it is. I think it is. This chair. I needed a nice, big, cushy, comfy chair to sit in every day. This is a tax deduction. You don't need an accountant to tell you that. You need to say to yourself, is this an ordinary and necessary expense for my business? Yes, I have a tax deduction. And if you're unsure, you call your accountant and you say, I'm thinking of buying a big, cushy chair for my office. Is that a deduction? And you have a discussion and you learn and you grow as a business owner. So I don't want people to think that tax deductions and understanding this stuff has to be done by people in suits behind doors that you pay ridiculous amounts of money to. Mm-hmm. You can all do this. We can all do this.
Right. And it gets complicated too, because especially when it comes to food and travel, at least for me, like food is like, I can only do half deduction, I think, or 50%. Or travel to the workplace doesn't count. Correct. But travel within the workplace.
Well, again, it depends. Yeah. It depends. So here's what I'll tell you. Your best bet is not for you to stress about that. I wouldn't waste 1 second of my day. What I would do is every meal, every gas receipt, you write it down. So when you meet with your tax advisor, they can have that discussion with you and say, okay, I see you have X number in meals. I can see you have X number in travel. Tell me what this is about. Let's talk about this. How much of it is going to see clients? How much of it is driving around to appointments? Where were you going? So the worst thing that can happen to me is when clients come in and I say, where's your gas receipts? Where's your travel mileage? And they go, oh, I don't think it's deductible. No, I don't want you to think. What I want you to do is track every dollar and every mile for me. So when you come into my office, I can help you. If you sit at home and go, oh, I don't think this is deductible. No, I'm not going to track it. We can never find it, because then I say to you, okay, now you have to go back and pull your records from the last year and give me your mileage information. And everybody's like, oh, I don't want to have to do that. Don't do that. Track every dollar. And then every quarter, you sit down with your tax advisor, you look at the expenses together, and they help you craft and maximize your deductions within the information that you've given them. It makes your life easy. Then you don't have to sit there and go, deductible receipt, not deductible. Don't worry about it. Put it in your record keeping. Get it to your accountant, and then you can have that conversation. You'll find more deductions that way, I promise.
Fabulous. All right, so I'm going to start to wind things down.
No, we're having so much fun.
I know, but we gotta get ready to go. All right, so Do you have any final words of wisdom that you would like to share with our audience?
I will say receipts, 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 and they don't have to be paper. You can take a photo with your phone. If God forbid you do get audited, you absolutely need to have receipts. Credit cards and bank statements are not receipts. You actually need the thing that says what you bought. And again, it doesn't have to be paper. It could be a JPEG or a PDF. It doesn't need to be alphabetized and beautifully filed. You just need a yellow folder or a stick drive that you can send to the IRS and say, here are my receipts. That is absolutely critical. And if besides record keeping, that's the other thing I want everyone to take away today. Receipts, receipts, receipts.
Fabulous, fabulous. Can you just say quickly, I know you mentioned the word audit a few times, just for education purposes, what is an audit?
So an audit is when the IRS looks at your tax return and goes, oh, this is unusual. I would like to take a look and make sure that all the numbers on this tax return are valid. And then they come looking and usually actually they don't come, like no one's going to ring your doorbell. There's no one coming to ring your doorbell. You get a letter in the mail that says, I've seen your tax return. I see your zip code. I actually got one of these letters. Everybody else in your zip code makes this amount of money, but you only make this amount of money. Please explain. I got that letter. Some people get a letter saying, oh, we see that you have travel deduction of $50,000. Please send us receipts and substantiate that level of travel. That's kind of what happens. So you're not going to jail. No one's taking you away in the middle of the night. It's a paperwork back and forth. And so I don't want anyone to worry about it.
All right. All righty. So thank you for that.
You're welcome.
Okay. All right. So words of wisdom. Okay. I think we got it. I think we're good. Great. All right. So now it is promo time. Let me get your banner up. All right, you guys. So Wendy is a CPA and you can learn more about her. She is all over the web, you guys. She has a website. You can go to her website, www.wendybarlin.com, if you want to learn more about her services. She also has a Facebook page. She is on Instagram and LinkedIn. And she also has a link tree, which is a bunch of other links that she has. So if you would like to learn more about Wendy, about her services, she is an actual CPA. Are you taking clients right now?
I am always looking for great people to help. And please reach out to me, because even if I can't help you, I'd like to find you someone who can.
All right, there you go. You heard it. All right. She is open for business. She is taking new clients. So if you're interested in, if you're looking for a CPA, you don't do bookkeeping, right? You're just the accountant.
I don't, right. But I'm happy to refer people out to make sure they get it done right.
All right, there you go. So you have a business, you have complicated tax questions. You could reach out to Wendy. Her website again is www.wendybarlin.com. She also has a Facebook page. She's on Instagram and LinkedIn, and she has a link tree as well. So all of this information will be provided to you in the description. And for those watching this on video right now, that information is scrolling below at the bottom of your screen. But for my audio people, do not be dismayed. Like I said, all of this is in the description. So wherever you are taking in this episode, the information is at your fingertips. So please reach out to Wendy if you are looking for a CPA. All right, Wendy, you want to tell us more about your business, the services you offer?
Nope, you did an awesome job, Gabrielle. Thank you so much. It was great being with you today.
All right, awesome. I'm assuming you're just virtual, right?
Yes.
Okay, you just provide virtual services. Okay, great. And you file the tax returns for people?
Yes.
All right, there we go. All right, and you're just the United States, right?
Correct.
All right, there we go. All right, so I encourage you to reach out to Wendy Barlin. Again, if you're looking for a CPA, you have complicated business questions, you have a business, you're trying to pay as less taxes as possible, whatever it is, you got questions about tax deductions, whatever it is, reach out to Wendy. information is scrolling below at the bottom of your screen for my video people, and for my audio people, this information will be in the description. All right, Wendy, thank you so much for joining me today.
Thank you.
All right, and thank you for bearing with me as I do this from my car. All right.
No worries. Thank you. Bye.
So let me take you off camera. All right. Well, all right. And she left. All right, you guys. So we have reached the conclusion of our episode. Thank you so much for joining me today. So I wanted to remind you that this podcast is a production of A Step Ahead Tutoring Services. So if you would like to learn more about A Step Ahead Tutoring Services, you want to learn more about our company, the services that we offer, please reach out to us. Our website is www.astepaheadtutoringservices.com. We are also all over that social media as well. You can find us on Facebook, Twitter, Instagram, Eventbrite, WhatsApp. I think I'm missing one. I feel like I'm missing one. Did I say Twitter? We're all over the place. So please reach out to us on social media. Please check us out and follow us on social media as well. And let us know if you have any questions about this episode. Let us know your feedback as well. So please leave a comment in the comment section or in the comment thread. I would love to hear your feedback as well. If you have any additional questions, feel free to put that in the comment section as well. And I wanted to let you know that A Step Ahead Tutoring Services, we are offering a discount. So if you are looking for tutoring services, whether it is for yourself or whether that is for someone in your family, maybe for a child, we are offering a 15% discount off of 6 hours of tutoring. So I encourage you to take advantage of that discount. All you have to do is reach out to us and say that you heard about us from Hot Topics. So you reach out to us, you say you heard about us from Hot Topics, then boom, you get your 15% discount off of 6 hours of tutoring. So I encourage you to take advantage of that discount. And I also encourage you to sign up for our email list and our texting list. You will receive exclusive offers, promotions, discounts. You'll receive great announcements. You will learn about everything that is A Step Ahead Tutoring Services. So I encourage you to sign up for our email list and our texting list. That information is provided in the description. And it is also scrolling below at the bottom of your screen if you just so happen to be watching this on video. Okay, so I'm going to share this last message before we officially close.
Hey there, have you heard of us? We're a small team of tutors here at A Step Ahead Tutoring Services. We believe that education and information should be accessible to everyone, regardless of income, race, or creed. We're dedicated to making this happen, but we need your help. Please consider making a donation to our company. No amount is too small. Your donation will allow us tutors to remain employed. Offer free and low-cost services, put on productions like this podcast, and reach out to families nationwide. With your help, we can tackle the academic challenges of our students and the emotional, mental, and behavioral changes that result from these challenges. As a bonus, we can improve our communities in the process. Support us today. Send your donation by Cash App to $ASATS 2013, by PayPal or Venmo to @ASATS 2013, or by Zelle to success@astepaheadtutoringservices.com. For our Facebook Live viewers, you can also send us a star. Your support means a lot to us. Please note, we're a for-profit company. We're not a charity. Your donation may not be tax deductible. Please consult a tax professional.
Thank you so much for watching or listening to this episode. I look forward to seeing you at the next episode. Thank you again, you guys. All right, I am now signing off. Bye.